I mean, what can I say? Today was a brutally bearish red day. Now, yes, granted, there were a couple things that were positive, a little bullish in the green, but overall, it was a sea of red. So in this video, I want to break down why, but maybe more importantly, I want to get into the things that I'll be paying attention to in the short term, basically tomorrow to conclude the week, because I see some interesting opportunities. And I also want to touch on how even though the bears dominated the market today, I was fortunate enough to secure an 87% profit trade, and I want to break that trade down for everyone. Now, if you enjoy these types of updates, let me know, smash the like button, don't forget to subscribe. With that being said, let's ride.
Oh, brother.
Dow closes more than 100 points lower, snaps a 3-day win streak after a hot inflation report. As you can see here with the heat map of the S&P 500, there's quite a bit of red, granted, a little bit of green, namely some of the biggest companies in the entire world, but overall, a lot more red. And you know the saying, when it rains, it pours, especially in Texas. I got some bad news. Old P-Hub. Dear user, as you may know, your elected officials in Texas are requiring us to verify your age before allowing you access to our website. This does not sound good to the company, so they're cutting off their services. Now, if you're in Texas and this is the first time you're hearing of it, I don't want to be the bearer of bad news. Remember, don't shoot the messenger. I didn't make the decision, but I truly, truly feel for you. But overall, maybe we should get a little bit back to the market. I don't want to harp on some devastating news here. Daily DGen report. As I alluded to, I was fortunate enough to secure about an 87% profit today, which for my account ended up being about 2.1 thousand. Here's how it all went down. Early this morning, Piper, which is a trading system that I have developed to give me an overall idea of should I be bullish or bearish on the day, fired off just past 10 a.m. a bearish 4 out of 5 confidence signal, which told me I should look for a bearish move. And that makes sense because look at this. The momentum was clearly bearish. In fact, it was so bearish that I had to wait for a bit of a rebound to make a reasonable position. And that's exactly what I did. A little bit later in the day, I ended up selling some SPX credits, some call credit spreads, and sold at 80 cents. Later on the day, collected back at 10, made 70 cents, which that's the profit of about 87%. And then here, after all of the commissions and whatnot, secured a 1.9K profit. Now, to kind of better explain how this played out, Piper saw this exact vomit and it fired off, said, hey, today's pretty bearish. So I had to wait for a little bit of a better fill because things were just so extreme to the downside. So right about in here, I sold some call credit spreads. If you're curious what that is, what that isn't, that's exactly what the entire Goonie Discord is about, of when to take these trades, what are the stats around them, and even what is the trade structure in itself. So if you want to do a little bit of a deeper dive into potentially making $2,000 yourself in a single day on about, actually, I should give you that update. The account now on my rebuild is at 36,858. Not exactly where I want it to be, but every single day we are getting one step closer. So if you want to witness the journey of the rebuild yourself, if you want to learn about what I'm doing, what I'm not doing, and how I see the market, and really just hang out with a bunch of other cool traders, that's exactly what the Goonie Discord is. Look at the first link in the description. If you use the code Goonie, the first month is completely free. Anyway, back to the trade itself. I sold some call credit spread and let the market kind of die, and then I didn't get my fill down here, was a little bit bummed out. And on a little bit of the journey up, the premium decayed enough that I was able to get my profit of 10 cents as you saw. And then the rest of the day, I kind of just took off. And in fact, I just was honestly preparing for this video. So that's the quick trade recap. But now maybe a bigger question for you is, why was it like this? The answer is inflation. Well, really specifically, inflation is too hot and what it did to the bond/yield market. Look at bonds right here, vomited on the week. In fact, since its recent peak, it is now down 3.5%. This is TLT, 20-year bonds, which on the flip side means that yields had to rip. Now, if you're wondering why all this happened, well, this week alone, we got 2 hot inflation reports. On Tuesday, an hour before the market opened, we got the CPI report, came in a bit hot, and for whatever reason, the market still went up. Remember, the market can remain illogical longer than any of us can remain solvent. So if you're looking at something, you're like, I just saw that report, Why is the market going the opposite way? That happens a lot. And unfortunately, it's just something you're going to have to get used to in the world of trading. But today, we got another hot inflation report, but this time things played out the way you would logically think it does. And I'm saying the way you would logically think it does because right now, remember, our Fed, Jerome Powell, the chairman of the Fed, they're fighting inflation. They're fighting inflation by basically trying to dampen demand by jacking up the Fed fund rate. Well, the question of the year is, when are they going to start cutting the Fed fund rate? When did they beat inflation? Well, it looks like that can's getting kicked down the road when we're getting hot inflation reports because it's coming in higher than expected, suggesting we didn't beat inflation. Wholesale inflation rose 0.6% in February, much more than expected. Not much more, literally double what was expected. The producer price index, which measures pipeline costs for raw, intermediate, and finished goods, jumped 0.6% on the month, double the Dow Jones estimate. It's bad when we miss by 0.1%, no less 0.3, which was double. That's crazy. On a year-over-year basis, the headline index increased 1.6%, the biggest move since September of 23. 2/3 of the rise in headline PPI came from 1.2% surge in good prices, the biggest increase since August of 2023, thanks to a 4.4% jump in energy. Crude oil had a big breakout to the upside, sending over 80 a barrel, no bueno. Retail sales increased 0.6%, while weekly jobless claims filing nudged lower to 209,000. That's the big news of the day. Why were things so red? Because inflation is still hot. That caused yields to spike because it was the market's interpretation that the Fed is very serious when they're saying they are willing to remain hawkish. So yields spiked, bonds went down, and ended up dragging a lot of our favorite equities with it. But it wasn't just equities. Old bitty Bitcoin got hit as well. Now, I want to be balanced. Like I said, I don't want to be a Debbie Downer, but Bitcoin also did notch in a new all-time high when we were sleeping of 73,835. Granted, today, if you look at the daily chart, this was a bearish engulfing candle, a higher high, a lower low, and obviously it was red, hence the bearish part. This could be a sign of maybe a little bit of consolidation is needed. But right now, if we were to take a snapshot of the situation, Bitcoin trading at 70,000, market cap of almost 1.4 trillion, and then all of crypto itself, 2.66 trillion. On the note of Bitcoin, I don't think it would be that crazy if we take a bit of a breather. I don't think it'd be a reason to freak out and be like, oh, crypto is a failed experiment. Because when you rip this much, this quickly, please don't forget, Bitcoin is up 63.3% year to date. So it's okay when you run that much to take a bit of a breather. Sometimes your rocket engines just get a little bit too hot. Bitcoin could drop to 58,000 as the cool-off period is imminent, according to Swiss Block. Bitcoin nearly doubled in price since late January, but a quote-unquote counter move seems to be near. So what they're calling out is 58. Honestly, maybe that'll be painful to live through, but please understand how high that value is relative to where we came from. So I think sometimes when in doubt, take a step back and look at the bigger picture. And also please remember that right now in terms of appetite, remember price is always the equilibrium between supply and demand. Well, we pretty much know the supply per day, 450 new Bitcoin are being mined. And the demand has just been tremendous on a relative basis. Right here are the assets under management, and they're just growing and growing and growing. Now, very quickly, side story related to Bitcoin. Maybe you were following the story, maybe you weren't, but there was a legal case trying to figure out who Satoshi is, and basically someone put their hand up, Mr. Craig Wright, and said, hey, it's actually me, because if you are, there's a lot of money associated with that. But the judge said, nah, honey, no, you're not. The COPA took Wright to court to try and prevent him from suing developers and other members of the crypto community, claiming IP rights over Bitcoin technology. Craig Wright is not Satoshi Nakamoto or the author of Bitcoin white paper, according to the UK judge James Mellor, said after closing arguments in the Crypto Open Patent Alliance, the COPA, trial on Thursday. I don't want to go into much more detail, just wanted to keep you a little bit apprised of the fact that we still don't know who Satoshi is. Now, let's look forward. What should we be paying attention to for the remainder of the week? Well, first of all, I want to do a little bit of a breakdown. Since we're talking about Bitcoin, and even though it hit a new all-time high, we do have this bearish engulfing candle, which is a bit suggestive of, okay, maybe a bit of a breather is needed. And that's exactly what we're seeing play out in Coinbase, which is obviously going to be highly correlated to Bitcoin itself. So a lot of higher highs, a lot of higher lows, recently showing a bit of a falter, a bit of a misstep coming back into the EMA cloud. Wouldn't be surprised if it wants to consolidate in this region by any means. You know what else is having a rough time? Tesla. TSLA. I know a lot of you are fans of it. I'm a fan of it in the long term, but I've been screaming from the high heavens ever since this breakdown. Look out below. Vomited to my first target of 175, and I said if that doesn't hold, look at 164. And now we're at the point where we have to go to the weekly chart to find the next level of support. And now we're looking at the low of April from 2023, which right here would be in the realm of the low 150s. Please pay attention to that. Also, just to put it on your radar, we're seeing NVIDIA pop, came down. I thought it was going to rip again. I swung some calls, and now that we had a little bit of the daily bar breakdown, I cut my position, and I'm waiting to see how this consolidation plays out. Very similar situation with Meta. I like the bullishness. I like the pullback. I thought we were going to rip, but just too much consolidation, and I just don't want to get caught up in any chop. So even though this has been a bit bearish, a little bit choppy, there are some positives. Check out what's going on with Microsoft. Broke out of its range and actually tagged a new all-time high today of 427.82. So maybe look for some continuation out of the world's biggest company. And also shout out to crypto. Solana's crushing it. Solana, not that long ago, trading at 100 and just rippity skippity doodle all the way up to almost 175. Would not be surprised in the slightest if in the short term we're talking about Solana at 200. So just want to put that on your radar. And to put a bow on all of this, don't forget to sign up for the Locals community. That's how you get the free weekly newsletter, which I'm about to show you. And it's also the connection to the Goonie Discord. So if you're a premium member on Locals, which you can become for free by using the code Goonie, it's the membership management, the payment management. It's how I get your emails to send you this. And it's also the connection to the Discord, just to quickly explain. But anyway, I break down the week, what I'm looking toward in the upcoming week. I also generate on AI some really cool photos. So at a minimum, you get to see fancy cats. I don't know if that's a selling point. I hope it is. But anyway, all the major macroeconomic events, all the earnings I think you're going to care about, and the seasonality. So to conclude this week, it looks like Friday, a little bit choppy. The bulls did win. There was one big loss, and since then they've been really fighting back, the bull camp has. So I'm actually going to say that this day, Friday, over the past 25 years, the past 2.5 decades, is actually favoring the bulls, so slightly leaning bullish. From a seasonality perspective, it's not the most amazing bullish day we've seen from a historic standpoint, but I would definitely still argue that the bulls have the upside. So just want to put that on your radar. All the things to pay attention to, no major macroeconomic events, but I want to give you the seasonality. I want to talk about the charts of interest, and I also just want to let you know how my comeback trading tour is going, because here we are on day 4, locked in about 1.9K after all the commissions, and slowly but surely I'm getting the account back to where it should be. Obviously, if you enjoyed this video, thank you. It means the world to me that you even spent a second of your day watching it. Let me know by smashing that like, and don't forget to subscribe. Thank you. I'll catch you in the next one.
Have a beautiful day.